Welcome to this, the second of 3 webinars being organized by the Blavatnik School of Government at Oxford University in conjunction with the Oxford Review of Economic Policy. My name is Colin. I'm Professor of Management Studies at the Saïd Business School in Oxford, and together with Paul Collier, who's Professor of Economics and Public Policy at the Blavatnik School, we are hosting these webinars on the future of capitalism. In each of the webinars, there are 2 authors who are contributing articles to a forthcoming special issue of the Oxford Review of Economic Policy on capitalism, edited by Paul and me, together with Professor Diane Coyle, who is Professor of Public Policy at Cambridge University, and Martin Wolf, who is Chief Economics Commentator at the Financial Times. There are a total of 19 eminent authors from different parts of the world contributing 17 papers to the issue of the Oxford Review. Each author has been asked to answer the same question in their articles: capitalism, what has gone wrong, what needs to change, and how can it be fixed? That is precisely what each of the presenters in this webinar series will seek to answer. They'll each speak for about 15 minutes. There will then be a discussion with them for a further 15 minutes, and then we'll close the session. I'll now hand over to Paul Collier to introduce the speakers.
Thanks, Colin. So we've got 2 people who really need practically no introduction. They are at the apex of finance and economics. We have Anat Admati, the Professor of Finance and Economics at Stanford, who's regularly listed in one of the 50 or most 100 influential people in the world. Her big contribution is the concept of, to the study of capitalism, the concept of financialized capitalism, and in a nutshell, how financialized capitalism has tended to corrupt politics on which it greatly depends. And that is matched by Raghu Rajan, Professor of Finance at the Booth School, Chicago. Again, absolutely at the apex of economic analysis, finance, and public policy. Raghu has actually walked the talk of public policy because he's been governor of the Reserve Bank of India, and he's been the chief counselor of the IMF. I first came across him in person at a famous meeting of Jackson Hole in, I think, 2006, when you forecast an imminent financial crisis. It was a riveting meeting at which you challenged Larry Summers, and I was proud to be part of that audience. It was a memorable event. But more recently, having come back from India, you've published this magnificent book, The Third Pillar, which is an analysis of what capitalism has failed to do. And the failing is not really capitalism, it's again of politics. And the third pillar, the missing third pillar, has been the pillar of community. The discussion will be led by John Mulbauer, a famous economist from Oxford, who has powerfully critiqued macroeconomic modeling on the grounds that it has, by positing a representative agent, it has missed a lot of the really important structural features, and it's missed especially the links between imperfect credit markets and imperfect asset markets, both of which are heavily influenced by public policy and produce path dependence and multiple equilibria. On that note, let me hand over to Raghu to begin.
Thanks very much, Colin and Paul. Let me begin by talking about the standard view of liberal society. We have free and competitive markets, and if you're from traditional University of Chicago, that's all you need. If you're from outside, you also need governments to enforce contracts and property rights. But again, much of the 20th century was spent debating how big the markets should be, how big government should be, and the relative size and spheres of influence of both. And we went back and forth, but I think this view neglects the third pillar, which is, if you put the government as the political side, you put the markets as the economic side, the third pillar is the social side, representing the community. And both directly and through democracy, it makes markets and the state work for the many. And when it does that, the many support the system. So I want to argue that what upsets the balance between the three pillars, the state, markets, and the community, is, as Marx had it, technological change. And once again, we're seeing significant technological change affecting each of these pillars and diminishing, shrinking the role of the community pillar. And if we are to regain a balance, we have to strengthen it once again. That's going to be my thesis. Let me start by saying it's pretty obvious that the technological revolution, information, communications, costs of transport, all these have changed markets. They have facilitated trade. We can now have global supply chains spanning the world. And we can produce anywhere, anytime, in part because we know exactly what's happening in our factory in Thailand based on communications technology. Now, in the industrial world, the effect this has had is effectively to hollow out the old manufacturing centers, while at the same time creating much stronger growth in the vibrant cities, in part because the old traditional manufacturing centers were where the manufacturing was, of course, done, while in fact, many of these countries have moved to higher, well-paying service jobs, and these are centered around the mega cities. Now, in part, this has been caused by trade, but as many economists would argue, much of the change has been brought about through technology, through the automation of many jobs, through the outsourcing made possible by technology. And the net effect of these has been to create higher levels of income inequality, but also erect barriers to reaching those higher level jobs, because what you really need to get those jobs is a strong education. And we'll talk a little bit about how those barriers are emerging. So markets have grown, become more integrated, span the world. A second effect of the technological revolution is, in effect, to grow the state. As markets have become more integrated, the sphere of governance has increased, and governance powers have migrated up. What do I mean by that? Well, think about banking. When banking was concentrated in the small town, it was regulated locally. As banking migrated to the entire state, you had state-level regulation. And then when banks spanned the whole country, you had national regulation. And now when banks span the world, regulation has moved to Basel, where deals are done in closed backrooms between central bankers of the world. For example, capital requirements are set there. So the ICT revolution by changing markets, has also changed the state. Often we think of the two as being substitutes for each other. In effect, they're often complements. They grow together. I mean, one way the markets grow the state is, as I just said, because of need for governance. Another is because the volatility created by markets necessitates a larger state. You can see that, for example, with what's happening with coronavirus, the effects on industry, on manufacturing, on services within the industrial countries has necessitated a national response rather than a local response. Localities have been overwhelmed. It's back to the national response. And this has been something that has happened through history. The state has grown with the markets. A third aspect now is the community, because all these changes in markets in the state do also disrupt the community. Take, for example, the fact that these small manufacturing towns have lost jobs, maybe to overseas, maybe to technology, to automation, maybe to the cities. But as the jobs leave, social disintegration sets in. Marriages start breaking down. Families start breaking down, you have more substance abuse and eventually crime. And that weakens the local community, also weakens local institutions. But remember, in order for people to partake of the global economy, of the strong global economy, get good jobs, you need good schooling. So what happens if you're in a community where economic activity has disappeared? The local institutions, the schools, the community colleges start breaking down also. There's a lot more crime, local businesses leave. And as a result, the barriers to you participating in the global economy increase tremendously. And this is accentuated by the fact that the capable, those who have the opportunity, leave. We have the secession of the successful who go to live where the successful live. So in a sense, this creates more and more inequality. The community has become weaker because different areas have been differentially hit. Of course, not all communities have weakened. Some have strengthened in the big successful cities, but also because the state has taken more power has migrated to the national and to the international level, the community has become disempowered. And this combination of the disappearance of economic activity and the disempowerment leads to more disintegrating communities. What we have in the developed world is huge pockets of underdevelopment. We have the renewed importance of place once again. And I think you could argue that the pandemic has worsened every one of these fault lines. We have seen inequality increase. Many of us have been able to work at home, still earn our salaries, others haven't, and have been exposed both to the virus as well as to low incomes. We've also seen the importance of local communities. We've also seen the importance of local communities displaced sometimes by a centralized national system, which has often brutal one-size-fits-all solutions like a national lockdown. So what is my proposal? And I'll spend the next 2 or 3 minutes making that clear, and then try and summarize. So what I think is important for capitalism to flourish is to bring back strong communities, to essentially support individuals as they try and acquire the capabilities to participate in the global economy. In other words, to get a sustainable globalization, we actually need more localization. And what I mean by that is bring back powers from the international level to the national level, and from the national capitals to maybe the local communities. Of course, there's a history of local governance, some of it not very appetizing. And what I argue in this paper is that what we really need is a new form of localism, what I call inclusive localism, where you have small barriers, sort of small walls identifying the community, but they're not walls that cannot be jumped by people who want to belong. It's inclusive in that sense. What do we need for this? We need subsidiarity. We need powers to be exercised at the lowest level that can handle them effectively, which means let's stop creating so many binding international treaties. Let's stop trying to harmonize rules and regulations across the world. They tend to disempower. They tend to be undemocratic in that sense. Don't depend excessively on centralized solutions. Of course, once in a while you do need. Climate change needs to be fixed at some level, at the global level, but also there are many other problems which need to be fixed at the local level. One example of subsidiarity is Switzerland and how it treats education. The National Institutes of Technology are managed and funded by the federal government. High schools are funded at the cantonal level. 26 cantons, high schools are managed and funded there. And primary schools are funded at the 3,000 municipalities. And in that sense, every level has its own sphere of influence. It feels empowered. So that's number one. Number two is spread economic activity across place. And what is the silver lining in the pandemic is we know many good jobs can be done at home, far away from the city. And in that sense, we have the ability to spread activity far more than we used to. Also, technology allows access for small niche firms to national markets. For example, the Wengerts, an Amish family in Ohio, have built a flourishing business selling high-tech horse-drawn farm equipment. Now, in the 21st century, who buys high-tech horse-drawn farm equipment? Turns out it's other Amish families. But the Wengerts can access that market because the Amish know they just have to get to the website and order there. They know how to find each other. And that's happening more and more. And the pandemic has accelerated that too. So economic activity can be spread. That's the basis of stronger communities and can be a basis for a more sustainable globalization. So let me end by saying, what about broken communities? And this is the problem of underdevelopment in developed countries. Now, the reality is, this is not quite the problem that Paul Collier deals with in Africa, because these are underdeveloped communities in a flourishing economy. And the real problem is how to build bridges between these underdeveloped communities and the rest of the economy. I've already talked about the problem of community empowerment and how that needs to be done. We also need community leadership. And we have to figure out ways to bring community leadership to the fore. I talk about Pilsen, which is a community in Chicago. It had 21 gangs in the space of 2 miles, horrendous rates of crimes along a murder rate which resembled the Eastern Front in World War II. However, they managed to come together as a community and started trying to bring crime down as part of a community. And as they brought it down, as the community engaged, they started drawing in businesses, etc. What was key was leadership. It emerged from within the community. Even broken communities can find leadership. But there are other ways we can encourage leadership to come back, people who leave the community to come back, for example, with lower taxes, by forgiving college loans, lots of things that can be done to increase community leadership. We can also use technology for community engagement, how to get people involved in the activities of the community. And I talk in the paper about what these might be. Of course, many communities would benefit from infrastructure. That's why I'm very, very pleased by the Biden bill to enhance infrastructure. I hope it actually happens. But many communities know what they need in infrastructure. So we don't need a top-down bill. We need a bottom-up bill to get infrastructure going. And sometimes what is dreamt of up there doesn't really suit the needs of the community. For example, in Philadelphia, there are 73% of the jobs for workers is within 15 minutes of a bus stop. But workers took more than 88% of workers took more than an hour to reach their place of work. Why? Because it followed a hub and spoke system. You first took your bus from your home to the hub, and from there you took it to your place of work. Took a long time, and as many people know, for low-income jobs, a long commute can often make a huge difference in whether you hold on to your job or not. I think rethinking some of this, using the community to say, hey, so many workers live here, so many workers have their jobs there. Why don't we have direct links between the two? Transportation infrastructure with response to the needs of the community would be great and would be an important way to improve the community. And finally, funding, but funding which is decentralized, which allows the community to think of what it needs to do. I talk in the paper about funding championships where people's communities sort of put forward their best projects and see if they can get funded. That's a way to engage the community. That's a way to get community leadership to come up. So bottom line, I think localism is a way of giving communities a sense of identity and empowerment. And even if nothing else changes, it gives them a sense of being able to govern the forces hitting them in this world with faceless globalization and technological change. It may also be the human jobs of the future life, for example, helping the elderly, dealing with the disease of loneliness. Those are important necessities going forward. So I think we need much more localism in order to make capitalism palatable. At the same time, I think this localism cannot be exclusive. It has to be inclusive. The state and the markets should help keep the walls around communities low. And that, to my mind, is the future that we should be looking for. Let me stop there.
Thanks very much, Margaret. Listening to you, I was just struck, especially what you said about leadership. I work from time to time with your Chicago colleague, Roger Myerson. And we work on the very poorest societies, Afghanistan. But your prescriptions are exactly the same, really, which is that you desperately need local leadership. Local leadership is endogenous to providing pots of finance that the leaders themselves can use. And in doing so, they demonstrate whether they're competent or not, whether they can be trusted. And that local leadership emerges. And that then gradually bubbles up to higher levels. So I don't know whether you've ever talked with Roger, but you're saying the same thing about very different places.
No, I agree entirely. I think many of us, you have written a whole book on this. I think many of us are looking at the same problem now and coming at it from, to the same place from different sort of starting points. To some extent, I think the way people dismiss localism is that's a den of corruption. It's people who are subpar in terms of capabilities. Just compare the guys who you have there today versus the guys who run things in Treasury or in the finance ministries. I mean, night and day. In India, you hear this all the time. The IAS, the creme de la creme, the Indian Administrative Service, and you're going to replace that guy by that local guy who's been on the take for so many years. And I say, look, you haven't tried to do it differently. If you don't try to do it differently, you're going to see that old guy because nobody else cares. This is okay. The guy's going to steal a little bit. Let him steal. Nobody really cares because you haven't empowered them. You haven't really built anything around that. But once you do, you will get more interest. You will get people paying attention. You will have good people wanting to make a difference. And as you said, you need powers, you need funding, and then you will see the leadership starting to emerge. And absolutely right, it's not going to emerge everywhere. There will be failures, but there will also be successes. And that's far better than all failures, which is what we have now.
And we know successes get copied.
Absolutely.
Colin, I think you wanted to ask a question.
Yes, well, that's a very powerful presentation, Raghu. And I just want to pick up on the point you ended with, and that is the devolution of finance, which in some sense one can see happening more straightforwardly in the public sector than the private, where there is an immense shift, as you'll be all too well aware, towards global markets and global centralization. what do you think can be done to try and counterbalance that side of the equation?
Well, I do think that, we are seeing technology. And one of the things I want to emphasize is technology is part of the problem. Technology appropriately used can be part of the solution, right? So we've seen technology try and figure out ways how to make entities that weren't financeable before more financeable now. So technology can obscure, technology can make more transparent. One of the problems with many municipalities is obscure finances. You have no idea what they're spending on, how they're spending it, and the locals don't have any checks and balances on them. But technology offers them the possibility of, what did you spend the money on? How much money came down to you? And did you use it wisely? So my sense, I mean, Paul obviously knows of these experiments in Uganda, tell people how much money came to the school, and that immediately improves the use. So that's one. But I think that you're seeing a whole lot of innovative solutions emerge. One example, big problem with community development is who gets the benefits. And often happens that, rents go up in the community. People who don't have ownership tend to get driven out as the community gentrifies. And so there's not a whole lot of support amongst the really down and out for community development, because it's not going to benefit us. We won't be able to hang out here anymore. Well, a reasonable way to do this is to buy assets when they're cheap before you start developing. And there are groups now starting. Now, there's a mix of funding right now, philanthropies, maybe some banks who want to show some corporate social responsibility. But start by buying the asset when it's cheap. Then when you build and the community gets stronger, you have a portfolio which is increasing in wealth. And that can be used to spread the good, the good stuff to the people who are renting, who are being left behind, to stabilize rents, for example. So financial innovation is coming to community development in much better ways. So I think there's hope. I think whenever we have problems and we hear the answer, it's been tried before, well, not this way. And we should bring those new ways and say, well, what happens if we try it this way?
And you have some very interesting thoughts on how large companies can help to do this as well as small local ones,
Yeah.
which sounds absolutely
Absolutely. I mean, one of the problems to some extent is, again, technology takes away even as it gives, right? So one way it takes away is precisely because things can be controlled from a distance. The corporate philanthropy now is concentrated in a small office in New York, because you don't need to have local offices everywhere. You can communicate, etc., very easily. And so why delegate? Just take it in. So technology, if has the tendency of helping centralization. But of course, the local community needs the local, department store branch or the local brokerage to be able to fund the high school ball or something else, or the local community college supply equipment. And so what we really need, this is one reason why I think it was I'm blanking out on the name. There was a commission and an act soon after World War II in the United States, where there was a move towards stronger antitrust simply because it was felt that large corporations would leave the community behind. They would centralize too much, and therefore they wanted small corporations. Well, that's a thought. But we could also try and persuade large corporations to decentralize their corporate social responsibility activities. Why hold everything at the center? Let your local Walmart be able to fund the local, police fund or the local high school fund. Let them be able to do that. So decentralized philanthropy also, and that will help the places where your businesses are do better. And so you don't need to have just small businesses. You can have large businesses, but decentralized within them.
I'm very struck by.
Can I come in and make a few?
Right near the end of your essay, you contrast that if we want to preserve the really big potential gains from a global economy, we actually need to devolve governance, both in corporations, which we just discussed, and in political governance. And that unfortunately, what we're getting is the opposite. The tendency for political decision-taking, both in firms and in politics, to be more and more highly centralized. And what are they using that power for? To destroy the economic benefits of global markets. Is that inevitable? Can we push back?
Well, I mean, you've said it perfectly. I think that the problem is that effectively our national governments are taking it on themselves to fight globalization on behalf of people, instead of finding out ways that people can actually benefit from it. So in this environment, to some extent, part of it is precisely to draw attention to the problem. Everything that we do tends to centralize more. I mean, look at our reaction to COVID, right? We want the national governments to take action. The national governments are the source of massive amounts of spending. So the temptation will be, you do what I say. I mean, I don't want to necessarily say this is a good thing, but for example, in the recent bill, some states said in the US, the bill, the Rescue Act, some states said, okay, you're giving us a ton of money, we will cut taxes. Now, that was a local response. Obviously, these were Republican states, and you may disagree with that. But the wrong thing to do would be to say, okay, I'm not going to give you any money if you do that. Because then it's the power of the center once again. You will do what I say or else. And I think the right thing to do would be let them make mistakes. And they have, a state electorate, which, if they waste the money and give it away in some way, the state electorate should probably punish them. Don't think that you're the only ones able to punish. And that's the sense in which I think pushing down may give people a greater sense of confidence that they have the ability, they have their fate in their hands. This is not some remote government which is going to do things. And that may make them more open to the forces of globalization.
Raghu, that was a fantastic presentation. Thank you so much for having done it. We'll now turn to hear from Annette Admati.
Thank you. So I'm going to shift gears a bit and ask the question, why whatever is the localism that we want is not happening? We need to nudge the corporations, we need to nudge the government, what's wrong? So you hinted at the very end to the politics of it and the governance of it, and that's what I want to focus on. So what's been going wrong with capitalism is the power balance, the power imbalance that we have now. And I will cut it differently in terms of pillars. We got corporations, we got governments, and we in plural. And they cut across borders, okay? And we got people living in countries, people in power, and people out of power, including these local communities. About local communities, what my essay emphasizes the law and the governance and the rules and the deceptions. So I will focus on the power to make decisions and the power to confuse people all throughout the market and the politics. Actually, I'm going to start by quoting a hedge fund. I'm from finance and I'm complaining about financialization. I don't know how much I'll have time here to elaborate on that, but financialized corporate governance, as was mentioned, is in financialized economy. As a finance person, is something I've become aware of the harm from. So this morning, as I was, it's still very early here in California, but I woke up early to look at the news, and there's a letter to investors from David Einhorn, a hedge fund manager He is saying the following as he's complaining about, Tether and other things like that. Many who would never support defunding the police have supported and for all intent and purposes have succeeded in almost completely defunding, if not defunding the regulators. For the most part, quasi-anarchy appears to rule the markets. So that's basically my point is capitalism has become reckless, has become unaccountable, and there's no sort of justice. It's ruined democracies, and it even has interfered with basic justice. So let's start with a few basic things, okay? Corporations are legal people, okay? We've created them to do great stuff, and they have done great stuff. But it's really important for economists to understand that corporations live aside from all stakeholders. The people who control them and the people impacted by them are scattered all over the place as human beings. But the corporation exists as a legal person, and that is very important. They're not owned by shareholders, so the agency model is wrong. They're not a nexus of contract because they cannot be replicated by a set of contracts. They are separate legal people. Then you get to who governs them and how they're controlled. The way this is done today is through financialized corporate governance, which means that it analyzes financial metrics like stock prices, like profit earnings by accounting standards, and return on equity and other metrics, whose measurements can be manipulated by market forces and people in the market, including accounting, auditing, and others, okay? So now, apropos local government, which Raghu Rajan advocates, and I'm all in favor of local leaders and everybody being happy in the local government. But let me give you a quick example on that. Corporations in the US have gained a lot of rights in the courts, like civil rights, like liberty rights that were meant for people. There's a county in New Mexico called Mora County. The county wanted to make a decision that they did not want to have fracking. They did not want to have oil on their county. They made a resolution that that's how they want to live locally. What did they run up against? They ran up against all the legal rights and constitutional rights of corporations. This county, with a budget of $1 million a year, had to go up against Royal Shell, ExxonMobil, and the other companies who sued in court. And the only way for this county to get to decide its own fate was to go all the way to the Supreme Court, which they couldn't afford to do. Very expensive in the US, and they would likely lose because our judicial system has become very investor and corporate biased. Okay, so this is the end of the book, We the Corporation. Our constitution starts with we the people, but the corporations have come in to demand rights that were even given to amendments that were written for the slaves, okay? So corporations are people with a lot of political power. And now in the global economy, they have global political power. Now that overwhelms justice system, legal system, and rules of the game. The best way to succeed in markets and in politics is to write the laws or interfere or get around the laws with the help of lawyers or get involved in how the laws are enforced in some way, okay? So that's that. I will stop that. I want to give you a few examples just to illustrate what I am saying. And the examples I'm going to give you are not I wanted to remember, there are examples that we see. And if you open the newspaper every day, you will see examples of what I'm talking about. So I'm going to rattle off, and each one of them is a whole interesting story, okay? And I will say just a couple of words about each one of them. Danske, Danish bank, money laundering in Estonia, okay? This years of it, discovered by a UK citizen who just looked up some of these companies that were saying that they have in UK saying they have no business in Estonia bank having. So corrupt money, kleptocratic money coming into the system with the help of our financial institutions and with our legal systems doing little, okay? Wirecard, supported and championed in Germany as DAX 30 company, fintech, awesome innovation, except with short sellers and Financial Times screaming for years that something's wrong with this company. Auditors approved, regulators didn't say, the regulators sued the short sellers, or banned the short sellers, sued the Financial Times. It's unbelievable what happened there, only for the company to discover that 2 billion euros are missing and it's broke right now. Greensill, recently, David Cameron was lobbying the Bank of England to give Greensill, a supply chain intermediary, central bank support. Carillion, contracts with the UK government, okay? A book about it was called Bandit Capitalism and the Corruption of the British State, okay? So if you look at Carillion and what happened, it bid for contracts. There's a long story there, but it's quite an interesting story. Echoes of Enron, and the government was right there signing contracts with a company that was really insolvent, but not disclosed as such. Archago was a recent scandal in the US. A small family business hedge funds, but not defined as hedge fund, borrowed money from multiple institutions, Credit Suisse, also involved in Greensill, and Mora, and a lot of other institutions. And they didn't know that this little tiny family office was borrowing from multiple financial institutions in order to gamble on a few US stocks. And all of a sudden, Viacom went down a little bit, and whoa, Credit Suisse lost $5 billion. Now that reminds you of the London whale and other scandals, and we can go on and on and on and on. Now on the back of Archago, where we're asking what just happened here? Oh, rules from Dodd-Frank Act, rules about derivatives, champions in IOSCO and all these international organizations that actually don't have any teeth were just postponed a decade after the financial crisis and 20 years after LTCM. And we still don't have derivative rules appropriately, okay? So on and on. So now there's a Chinese bad bank called Huarong, and now we're concerned about whether the Chinese government will back up this, this institution, which raised tens of billions of dollars from BlackRock and Vanguard and all of that. Oh my God, all of a sudden it's distressed, a company created to take care of distressed other companies. Couple other examples to end. In my area in California, there are fires, and some of them are caused by our local utility, caused in the sense that they didn't take enough care of their equipment, etc. So there were a few big fires, and this utility, Pacific Gas and Electric, PG&E, where I get my electricity, filed for bankruptcy in order to protect itself from all the fire victims who were going to sue. So all the claims of fire victims moved to the bankruptcy court, which was amazingly decided. As they emerged from bankruptcy last summer, this is COVID 2020, the company went to court. What does that mean? The CEO was in court, mask on, admitting to 84 counts of manslaughter. In the US, you can criminalize corporations, okay? That's not true. In the rest of the world, we assume corporations never break the law. We just settle with them, okay? And nothing happens to any human being. So the limited liability extends to a big shield against any liability for any wrongdoings. It admitted to 84 manslaughter. A person doing any manslaughter will sit in jail for a year on average here by a penal code. But a corporation which admitted guilty to 84 manslaughters in a big fire that destroyed a whole town, paid about, I think, $4 million in fine, maximum penalty, okay? So you talk about the justice system in which corporations live as legal persons and human beings live as persons. I cannot drive down the street with a car without the government knowing who I am and that I have insurance. But corporations fly all over, do all kinds of things, convince people to buy all kinds of terrible products, do a whole bunch of harmful things, and that's Purdue and Volkswagen and you know, all the gig companies and all of that, with no liability. Somebody else is going to bear the cost, whereas individuals have the law that they have to obey. So I think the system is out of control, and what we need is democracies back on the beat of rules and empowering them to do all these things that we want them to do. So economists making policy proposals have to think about how to make democracies work. What we have right now is a crisis in democracy and capitalism, and we need to take care of the democracy before we can take care of the capitalism. Thank you.
No, thank you very much indeed. And I'll now hand over to John Mulber.
Thank you very much, Anat. I admired your paper very much, and I agree with everything in it. But let me just compliment your impassioned address with some points from the paper itself. Let me give the audience some key quotes. So from the introduction, here are 3 quotes. Institutions are vulnerable to distortions from imbalances in power, a mix of distorted incentives and various forms of confusion and flawed narratives, and we need to improve transparency and governance. So these are general lessons from your paper. In the second section of the paper, there are some very good comments about private ownership, about the integrity of governments and legal systems, about political contributions, again, making the point about transparency, effective governance and accountability, and what happens if governments don't set and enforce rules, what happens to markets organizing around private power structures. And then your point about corporations, corporations having huge political power and with a big impact on outcomes. And you make the point, Raghu made the point about tax competition and the way in which corporations use multiple jurisdictions to undermine the power of nation states and play off governments and existence against each other. Now, the fourth section of the paper is the one that you've focused on in the examples that you've given, and you know, very good points here. Here's some quotes from the paper. You're talking about the financial crisis as another aspect of these out of control issues. Central banks and governments acted to prevent defaults, concealing regulatory failure on a massive scale. And you make the point about global hot money and opaque offshore finance, as you've just mentioned, allowing criminals and kleptocrats in the Danske example that you gave. And then there's a very good section on misinformation deception, about how preferences are formed and how one can influence people. And you make the point that there's no accountability for using subtle deceptive tactics, which are very widely used by corporations. You talk about accounting standards and how they've become corrupted, and then social media platforms. And the conclusions really are 3, because one of the on the agenda is not only recognizing what the problems are in the system, but how can we change the system? And you know, you draw 3 conclusions. First, to make the laws, institutions, and the private sector and the government trustworthy, we have to improve governance everywhere. So not just in government itself, but also in the private sector. And secondly, you want better education. You want savvier, informed, engaged citizens, competent leaders. And thirdly, you make the point that academics can play a particularly important role through their engagement, providing policy advice, speaking up to challenge flawed claims, especially on issues that are confusing to many, and helping to hold power to account. So these are civic duties that we academics have and should take more seriously. So I agree with all of that. Let me just add a few more points on section 4. You make the point that financialized capitalism is a much better description than shareholder capitalism or free market capitalism. Absolutely correct. And you make the point that there are large disparities in social and private returns in the financial system. Now, the word externality appears only once in your paper, and I thought it's something that is really quite fundamental and could be made more of. So real and informational externalities were terribly important in the global financial crisis. The huge disparity between the private and social value of information, which is a big generator of inequality. We think about the wealth distribution, the different returns that really wealthy people, the higher returns that really wealthy people get from their investments. And then about the incentives in individual firms to increase systemic risk. And it seemed to me that you could say a bit more also about asymmetric information. In particular, you don't mention Stiglitz in your piece, and he does seem to be a very important person in this whole debate. Now, let me just give another example of what you're saying. The investment banks. Now, you make the point about corporations acquiring through public listing this transformation of their obligations, becoming free of constraint. Instead of having a skin in the game, they were absolved from that. I mean, this is how the Big Five, the Gang of Five went public. Merrill Lynch in '71, Bear Stearns, and so on. Goldman Sachs in '99, quite late, to compete with international banking, encroaching on their core business. I think in your paper, you don't mention the distinction between investment banks and banks. You seem to lump all banks into the same category, and that didn't seem to be quite right. But going public allowed these investment banks to get bigger and to fund massive lobbying to deregulate. And in particular, the two most dangerous pieces of deregulation in the US were these: the Commodity Futures Modernization Act, which made derivatives enforceable and payable before bankruptcy. In other words, it gave derivatives superior rights over pensioners, customers, workers, which is really quite shocking, a key aspect of the financialization that you're alluding to. And then, of course, the SEC decision in 2004, which Larry Summers, I think, approved, to ease capital requirements on investment banks, which then led to some of the huge problems that we saw. And this is the too big to fail, too powerful to jail story, which of course had huge political ramifications, as you point out. So how do we achieve your three recommendations: improve governance, better education, civic duty of academics? Well, I would have thought, while there are different ways of doing that, I think the list is not quite long enough. So, for example, antitrust, to reduce the agglomeration of corporate power, especially for media. We could reform who owns data. And then there's the question of money in politics. Can we learn from history? Can we reverse history? Looking at the historical record, some of the key points in this rise of the power of finance on politics in the US. Lewis Powell joined the Supreme Court in 1971 and famously wrote this memo that set the scene for corporate lobbying. He was a board member of 11 corporations. He really took to the Supreme Court the influence of corporations. And in 2010, the decision by the Supreme Court and a 5-4 vote to reduce the influence of campaign finance limits because they violated the constitutional free speech rights of corporations. As you pointed out, to give corporations the same rights under the Constitution as individuals is really quite absurd. Anyway, these are some of the key points in history. Now, in terms of corporate power and shareholder influence, I'm wondering whether there might not be a possibility of using the proxy voting services in order to bring much more community influence, democratic influence onto corporations, and policies on executive pay, on gender diversity, environmental and social risk oversight, financial expertise of audit committee members, attendance, and so on. Social and governance issues, poor disclosure. These are some of the issues that Glass Lewis and ISS have raised in the past. One can raise questions about how effective these proxy voting services are, but one wonders whether nudge could be used so that all shareholders, unless they opt out, automatically become represented by one of these organizations, and then collectively shareholders could exercise much more influence over corporations. And then there are questions of, in a democracy, civil society institutions are tremendously important. Independent central banks have played a leading role on addressing climate change. The Fed belatedly joined in, given obviously the political situation in the US made it much more difficult. Then you've got labor unions, you've got NGOs, independent media, and then media regulation. Is it possible to go back? History seems to go one way, but can we go back? Is there a possibility that the fairness doctrine might be restored? Anyway, see, these are questions, provocative questions that maybe you might think about. Thank you.
Thank you very much indeed, John. Annette, would you just like to briefly respond to that? And then I'm afraid we'll have to close.
Thank you. A lot of what you said were also on the cutting floor. I was going to talk about partnerships moving to corporations. Investment banks and banks are no longer distinguishable. The ones that survived became bank holding companies in the US. I'm outraged about derivatives and others bankruptcy court, both being opaque and being preferenced in bankruptcy. So you touched on a lot of it. And antitrust, of course. I just had to say the devil is in the details. I just had to go to the big picture, because once I start, I would run even more out of the 5,000 word budget for this essay. Fortunately, I'm going to write a longer essay for economists, for Journal of Economic Literature, which has no space constraints. So I will be able to really into these really important issues. And I didn't also go to the basics of asymmetric information externalities. It's all in other writings, so I just cited them. Thank you.
Well, thank you very much indeed, Annette, for a wonderful presentation. And John, thank you very much for an excellent discussion. I'm afraid we are out of time, but I'm very grateful to all of you and to Raghuраjan for a tremendous event. And we'll resume next week at the same time at 2 o'clock. So I hope you'll be able to all join us then. Thank you very much indeed, and bye-bye.